man. That's support from February 07. It ought to hold and bounce and continue on back up past the 200. Think of the mentality. That's also a rally-based drop, rally-based rise, whatever the hell that thing is. Rallies up, bases out, and rises up again. Some stupid textbook term. I can't remember. It's not important. What's going on here is people are calculating this in their little heads, and they're already planning on where they're going to take their wife. Right? They're projecting this move, and we know that it's BS. We know that it's not going to play out like that, and that they will correct off of the high of the day once it's established. And you know the trade is good because they pulled off and went into extended consolidation to hold the level. How long do they work these levels? 30 to 90 minutes. The 30-minute anomaly is this, railroad tracks. The 30-minute anomaly is 15 up to the high, 15 away. They spike it in 15 minutes, and they immediately get out of there in 15 minutes. That's where the 30 minutes comes in. But an ideal high setup is 90 minutes to about 2 hours. I could tell you that in the pound crosses, railroad tracks occur most often. The volume, for some reason, they must trap quickly in the pound crosses and get out of there. Okay? So here's what happens. You have your drop. This is the no trade zone, especially for the newbies. Okay? You should be in your trade and up, and you should be in profit like right here in 10 minutes. It's over. I'm exaggerating. An hour or so, you're out. No nursing. The trade goes into profit immediately. When you catch the trade at this hammer, let me toggle. When you catch the trade at this hammer or this railroad track, they shift the zone right here and go into consolidation and then shift it again. You're up in profit the whole time they're consolidating. Depending on the spread, +5, -1, +7, you're in consolidation. Somewhere in here, you're out. You got your +50 for the day. If you want to hold it, that's okay. The exit is the reverse signal after 3 levels of drop. You're not always going to get 3 levels intraday. Understand that. But now, look. Take these 2 pieces. That structure right there, right? That's as an outside bar, those 2 pieces together. If I put it on a 30-minute chart, those 2 would be together. That's an outside bar spiked to the low. Notice something else, too. When they hit the low again, you have your 3 hits to the low. This happens to come in at 9:45, and you have your consolidation to start the session above the low of the day that's established, right? It's safe to enter anywhere in here. The better entry is when they make the pass towards the second leg and fail to take it out. I'll cover the times on the boxes. Just enjoy the concepts right now. Don't worry, Robert. I got you, man. The trade is counter to the market maker trend. So the first target is the watermark, 50 EMA. Look to take between 30 and 50 pips on a counter to the market maker trend trade. Can it go for more? Of course. But you are counter his setup. If you're in A1 or V1, which I will cover, I'd rather you not counter for the day. Okay? Understanding the cycle, A1, V1 is a do not counter. Because the straightaway trade occurs most often here. All right? Hope you guys are seeing this. Okay. Trading zone again. This is exactly an example of 3 hits to the high where you would have scratched out, and that's okay. But when they hit it again and didn't break it, you got something solid. Okay? The only thing I don't like about it is 2 hits are in one session, and the third hit is coming into the U.S. session. I like to see the hits spread out over 2 sessions. That is way more powerful because that means they accumulated for a while. But look at all this accumulation, right? Look what you got. Here's the high. You got your pushes up. 3 swipes at the high. This is variation on the theme. Okay, now, they hit it. They trade off of the high for hours. They come near it, but don't take it out. Notice how the pins have flipped to the top side. There's no bottom side pins. That is such a huge clue, I can't tell you. Notice on this slide all the top side pins. It's very important. Why? They run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. Run the market up, snatch it away, grab some traders. But I want you to see what's happening down. Look low to the TDI. The price is staying at the same level. I'm going to talk about the TDI, don't worry. The TDI is built on the RSI. The RSI averages the closes. So what's going on here is that taking an average of the closes is plotting a falling RSI/TDI line. That is telling you that these guys are averaging lower closes. What does that mean? If they're averaging lower closes, it means they don't want to go back up to the same level, and they're closing and jamming people every time. That's what it means. Okay? That's how you read the indicator the right way. That's how you explain divergence properly. The average of the closes is off of the high of the day in this example, and it is jamming traders on each and every pass. Hang on, Terry, I'll explain it. Okay? Yes, if you go long here, you're toast. But think for a minute. Look at the technicals, how they're set up. We got a watermark trading above mayonnaise. So that means the 50 is above the 200 EMA. That's a technical long in every book. You buy the dips or the consolidation zones in a downtrend, anticipating the AB equals CD, the 1618 extension, the lightning bolt's going to strike you in the head or equals whatever, right? Those are the technicals that we've all been taught in the books. Understand? Them holding the level ensures that the retail traders pile on the wrong way, not understanding the session changeovers and the market makers' targets when they come on. Holding that level guarantees that retailers are taking it the wrong way. Now, here's a little tricky one for you. Holding that level also allows them to work the Euro odd cross, AJ cross, or anything paired with Australian. Now think for a minute. They come out of the box, they issue 3 swipes and hold the high. They hold the high for 2, 3 hours, 4 hours, almost half a session, 4 hours. Holding the high does 2 things. Tricks the hell out of the retailers, induces longs, and allows them to correct an Australian cross on the backside when nobody's looking. This setup signals to you that there is opportunity in the Australian crosses. Understand? If they extend the high and hold the level, the opportunity presents in Euro odd, AJ, no, not Applejacks, Australian JPY. Anything crossed with AUD. Look on the big board, there's tons. Think about how powerful that is. You can come back on the third hit when they come back and change the session over, and you could still take this after you've had all night. Okay? Chasing this currency after it's left the station is an absolute no-no, or whatever you want to call it. I got to hit you on the hand or do my fingers like shame on you. Chasing this after it's left is an absolute no trade. That's why this says no trade zone. When they shift the zone away from the higher level long holders, it's too late, man. There's ways to get in that, but it's for the advanced traders. I don't want you to do that right now. I want you to simply take a short off the high and a long off the low and be able to add contracts. Your entry is comfortable anywhere in here. The second pass goes, doesn't take out the high, you can enter in here 30 to 90 minutes while it holds. If they make another pass and don't take it out, restart the clock, the trade's still valid. And then look what happens. US changeover, they don't take out the high, lights out. Straight red bars, an hour and 30 minutes to profit. First consolidation zone. Right? Then another drop. Simple. Do not try to, a lot of you guys are trying to turn this into a W. You have to understand they worked the high today. If they work the high first, you're looking for short opportunities. If they work the low first, understanding where the peak is, which I'll talk about, you have to understand they work the low first, you're a buyer against the trend. If they work the high first, you're a seller against the retail trader's trend. You got to think like these guys, not like a textbook retailer. Okay? Hope you guys are understanding. All right. We're going to cover some rules to profit buy, and then we'll take a 5 or 7 minute break, okay? Here we go. Write these down. I'm going to go slow. Stop trading every day. Trading every day lines the broker's pocket, doesn't line your pocket. Now, I'm not saying take off and show up once a week. That's not what I'm saying here. What I'm telling you is you need to show up in your office every day at a set time. Look for the setups. I'm going to give you the window of opportunity when those 2 times come. If there's no setup, there's no trade. Don't sit there staring at the chart going, oh, man, maybe that's a second leg of an M or a W. I don't know. Might take it. You're over. It's done. That's it. I want you to find the crystal clear setups that form the big W's and the M's or multi-sessions, the easy-to-read stop hunts where you will be successful. What's the difference if you take 10 trades with 1 lot or find the absolute pristine setup you know is going to pay out and take it with 10 lots? Hit your 50, pick up $5,000 for the week and be done. And have no stress, no worry, no aggravation. That's how you got to start thinking. You got to start thinking like a market maker, not like a retail trader. That activity or the 9 to 5 mentality where you got to come in your office and trade every day because you showed up. That is crap mentality and leads to failure. Learn to become highly selective of the setups that I'm showing you. If it scares you, if the variation on the theme messes with you, that's a pass. I promise you there'll be another one tomorrow in more pristine condition than maybe the one you passed on. I promise. Okay, I want you to set your trading hours like this. Times are Eastern. I want you to show up in your office around 12, 1 o'clock in the morning Eastern Time. I want you to look for the setups at the end of the blue box, which is the last 1/3 to 1/4 of the Asian session, and go to about mid-London, around 4 hours. Take a break. Zen and his wife Diane have a lot of children. I lose track sometimes. They cannot stay up at night. They trade the red box in the morning after they leave their kids off for school. After you trade the Asian session, if you want to come back, and most of you do, you can't stand it, take a break, take a nap, clear your head, walk the dog, smoke a pack of Subio. Then trade the red box for about 2 to 4 hours, from 8 to 11, 8 to 10. And that's it. Don't stand like a zombie and stare at the screen. It's not necessary. That's the behavior that leads to destruction of your account. Okay? And I'm going to, after the break, I'm going to explain to you why these rules apply. Yeah, Subi, eat some black chocolate, man. That's good stuff, especially from where you are in France. It's really good. Okay, so listen. Here's how you do. Show up in your office. You're going to immediately be able to do a check down on the chart. I'll show you how to do it. You look back 3 to 5 days, identify the peak formation, and see where you are in the cycle. WVVM, MAAW. I'll draw it for you. Don't worry. I'm just telling you about it. Okay? You know where you are in the cycle, what day of the cycle you're at. You have the technicals worked out. You don't have to draw lines and fibs and crap on the chart. Okay? Depending on your dealer, the blue box ends between 1 and 3 a.m. Daylight savings time, it moves back. I don't change mine. I leave it at 2 o'clock. I don't change it. When the clock goes back, I don't care. Just leave it. It's too much work. Become highly selective. Take a break in the middle. Come back for the end of the London session, the beginning of the U.S. session, and make sure you encompass the 9:30 equities market, U.S. equities market open, in order to be there for the breaks. Right? You got to encompass that couple of hours because they might come in and hammer a brinks for you, and you got to take that trade. If you're done in the London session and get your 50 pips, Marta, if you're listening, don't give it back in the U.S. session. Okay? I think tomorrow, or tomorrow's Thursday already, I think tomorrow Zen is going to cover what him and his wife do for the U.S. session. Okay? All right, it's 7 o'clock. Let me pull up my little stopwatch. I didn't do it yet. Hold on. Okay, I tried to answer some of your questions on the break that were pertinent to where we were. Coke, very nice statement. Thank you. He had an aha moment last night. That's the whole point, man. Okay, here we go. I want you to learn to capture 50 pips, and right now, not one pip more. You're going to be able to add contracts, man. Greed kills all good traders. Here's what I want you to think about for a minute. If you accidentally get jammed up in the stop hunt, you should still be able to book a profit going the wrong way if you aim for 50. Okay? So if you learn to not be too selfish or crazy or greedy or whatever the right word is, and learn to extract 50 pips consistently out of the market, even if you trade the wrong directional bias, you got a shot at hitting your limit. I can tell you that Zen is an excellent trader. But like all men, we got to get more, right? It's the testosterone. We got to beat these guys and beat the hell out of them, get more and more and more. And he struggled with this when I first taught him about a year and a half ago. He insisted on trying to lift his take profit and go for more, and I told him why. A lot of times when he lifted it, he would end up with plus 30 or 35 because they would make the retracement on him, and he would be damn it and take his 35 pips off. When he locked in his mind, the take profit needs to be a fixed target, and he'll be in and out in 3 to 5 bars. When they shift the zone and start pulling away, he'll hit his limit and just start using contracts to compensate for the extra pips. His trading turned around completely, and he's now, I can't say he's the master because I think I am, so he has to be the junior master. Anyway, greed kills all good traders, and everybody goes through that phase of where they feel like they can get more and more and more. Don't forget why you got in this business. Time, freedom, and leverage. Use that to your advantage to extract your 50 pips like a master without fail, and add 5 lots or 10 lots or 80 lots when you become proficient. If you know that you're going to hit 8 out of 10, the losers aren't going to bother you because you know you'll get it right back and end the week net profit, net positive. I want you to learn to take only crystal clear setups. Whatever that means to you. I went through this with Lauren last year. I wanted her to pick her signature. And I don't know if she ever did. I can't remember. She sent me an email a while back. She liked 2 pins to the mayonnaise. That was her deal. If you get a stop hunt at 3:30 in the morning and they hit right to the mayonnaise and they issue a pin or a hammer right on the mayonnaise, that's a nice setup. That's going to pay out. That's going to bounce off of the 200 EMA. I'll explain to you why in a little bit. But what you need to do is find what it is that makes you feel all gooey inside. Like, wow, I see that 2 pins in the mayonnaise. I see a W on the 4-hour. I see 3 swipes at the low. When you establish that and become comfortable with it, I want you to focus your homework on that. If you say, Steve, you know what? I'm going to take 3 vector candles to the low, second leg, and I'm going to grab my 50 and be out. Then you need to focus your homework on finding those trades and see how often they pan out. If you decide you're going to focus on multi-session big W spread out over a day or two, and then convert the spot trade to a swing and hold it for 2.5 to 3 day cycle, 200 EMA, my friend. Mayonnaise is 200 EMA. I'll cover it, don't worry. If you catch the midweek reversal or the big W formation over 2 sessions, that's the kind of trade you can hold. If you want a swing trade, obviously you got to hold for more than 50 pips. But when you're learning, if you can't make 50 pips, how are you going to make 250 pips? It comes with time. It's a process. The biggest problem most of you are going to have is flushing the crap out of your head. I don't know how to do that. The old technicals. Coke wrote me a little something on the break that he was hanging out with some of his friends, and they took the wrong directional move based on old technicals, and he said he felt bad because they were going the wrong way, and he knew it. He saw the market through a market maker's eyes or through our eyes as a group and realized those guys are going the wrong way, man. Sorry about their luck. Anyway, that's the stuff I want you to understand, is that if you see the perfect setup, you can take 50 contracts without fear of loss. If you're trading a 6 out of 10 system, and you're not that good at a 6 out of 10 system, how in the heck are you ever going to put those kind of numbers on comfortably, without fear? Okay? But I want you to understand that if you say, I'm going to take multi-session M's and W's, you go back and look how many times those things pay out 50 pips. Almost always. And you're going to see that the ones that don't hold consolidation and scratch out. When you realize that, which comes from time, screen time, and doing the homework and seeing them, when you realize that, you're going to not be afraid to put 10 standards on there. I'm not telling you to take 10 standards tomorrow. I'm telling you to start small, grow your account, and get yourself into a position where you can take comfortably 2 to 5 trades a week, 1 a day, of the most pristine, perfect setups that will yield you what you need to make to pay your bills and be comfortable. Everybody's different. If you live in New York, you've got to have like 500 trades a week. If you live in Nebraska, you probably got to have 2 trades a week. Depends on your lifestyle. But it's all obtainable here by understanding how these guys behave and controlling your emotions and your greed in the process. Okay? All right. Why 50 pips, Steve? I want to go for 500 pips. Okay. You are not going to deal from the absolute bottom or the absolute top. So let's take 10 to 15 pips off of that number of the move, right? You got to include the spread and slippage that these guys do. That's the business. The bigger your contract sizes, the more you'll start to see it. Let's add 5 for slippage and the spread. You got a 2-pip spread, they slip you a pip 3. It's a lot of money with a lot of standard lots on. We all know that all 3 levels are not going to appear every day on the chart. So that limits you to what's going to be available to take. So if you average level 1 and level 2 from the peak formation to the high-low day consolidation zone, you got about 70 pips available to you if you have a tight ADR for the day. You can easily grab your 50 pips out of that float and grab most of what was available for all the other traders and come out way ahead of the curve. The bottom line is this. I don't know if DJ's in here, but he wasn't seeing the pattern so clearly. But because the stop losses are so tight when you get in near the low or near the high, 7, 10, 15 pip stop losses. I don't say that in public because people think I'm nuts. Hey, Doug, nice to see you, buddy. I hope I'm not embarrassing you saying this, but he had a bad week where he had more losers than winners. But because the stops were so tight and he was taking 50 out of the market at will, he was net profitable. I want his numbers to be better, but the bottom line, while he's training and learning, he's still making money. Because he's getting in close to the numbers. Sometimes he's wrong and he hits a stop, but it's 10, 15 pips and he goes again. He can have 2 or 3 stops, and when he hits one, he gets it all back for 50 pips. It's called controlling your losses and your emotions. Hey, Zaim, if you understand what's going on and how they structure the stop-loss levels and how they hit it, you can come right back at them. I once heard, in a school somewhere, I don't want to say the name, they said if you get stopped out, to go on vacation. And they really meant it. You do not want to be on vacation with me if I just got stopped out. What fun is that going to be? What I want you to understand is that when you analyze the market conditions and you get stopped out, if you walk away and come back the same time tomorrow, you could fall right into the same conditions. If you get stopped out, anyone want to take a stab at how long you wait? 2 hours. Why? If they go vector 3 again, 3 bars takes 45 minutes. If they spike the low and go back into consolidation, that will take another hour or so to set up that structure. If they spike the low again, that's another 15 to 30 minutes. There's your 2-hour time window for re-entry. The structure must be 25 to 50 pips above or below your previous entry. If they hold the level and pass a third time, and it still is also 2 hours, and they might have snapped you out with a pin and closed below or above that structure, that is still a good entry. I'll draw it for you, don't worry, I just want you to listen. Okay? So if you take a trade right out of the London box and they vector down, it looks like the W to you, and they hit your stop, you don't walk away. That's what amateurs do. You analyze the market condition, wait for the next level stop hunt and strike zone, and you strike. These guys vary the levels to keep you confused. There might be a 4-hour line laying down there. They might come out, hold the level, and then go, there's the 4-hour, bam, and go get it. That might cause you to get stopped out. Control your stop and enter on the next strike zone 25 to 50 pips below where you just were. And I'll illustrate this. I just want you to hear it. I'm trying to give you the concepts for the next couple of days. You have to listen. Don't worry about the charts. Don't worry about your indicators. Don't worry about stuff you cannot see. It's irrelevant right now. I'm trying to get you inside the head of these guys, the mind of a market maker, and understand how he handles the market. This knowledge by itself is invaluable. Don't worry about the chart stuff. We'll straighten it out, I promise. Okay? If you listen to the rules I just laid out for you and wrote them down, there's a good chance you will hit your limit every single day. Or every time you take a trade, if you wait and exercise patience. The thing that's kind of crazy is you can trade both ways against a trend and against the retail trend. So that means you have an opportunity to book profit in both sessions from both ends of the range. You can take a short off the M and a long off the W on the extremes of the range and be profitable both trades. And book yourself 75 to 100 pips consistently. 50 on the first trend move, 25 to 50 on the counter. Going against the retail traders. Market makers trade both ways every day. Why would you have fear to follow them and trade both ways? You can average 100 pips a day doing it this way. Combination of pairs, let's say you take Euro, GBP, CHF, you bag 50 in the London session on all three pairs. That's $1.50 times your contracts. Then you can take the counter in one or two pairs back to the watermark. On the ideal level 3 drop, set up W back to the watermark. Another 40 to 50 pips. Or until the pair comes to rest into consolidation. Understand the extremes of the zone. A sucker trades in the middle and offers up your stop loss for these guys. Learn to be selective on the extremes of the range. If you're only studying one pair, that's perfect. Sunny, I don't know if she's here. She told me she got so profitable she ain't wasting her time taking my seminars anymore. I don't know if I should be proud or insulted. She focuses on Euro USD. She took about a $500 account to $8,000+ in a few months. Focusing on only Euro USD and trading both sides of the range, understanding their behaviors, and mastering that pair. Trent, I don't know if he's here, has been chasing the pound USD for years. It was driving him crazy. When I gave him the last piece of the puzzle, he beats the crap out of the pound on a regular basis for multi-5 figures a day or in a couple of days. By the way, you're probably going like 5 figures. What is that? Not 5 figures a year, 5 figures a week or a couple of days. Okay? That's the power of understanding what these guys do. I want you to understand that. Once you master this, you're going to have no more fear. The market's going to be easy. Okay, so now, here's what we're going to do. Let's start to break the system down, the things on the chart that you guys have been bugging me about. And let's start to break them off, put them all back.